The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And my goodness, we have some more volatility. Here's the daily situation on the S&Ps. Let's just get right into it. We talked yesterday about trying to buy some little bit of a trading opportunities around this DMZ. We talked about this 1994 rounded off area, which was sitting here with the change in tone of our 240s at the same time, kind of new profile attempting to appear, a little bit of a base situation there. But we've crowded this area again, and that's, you don't want to see these things reverse and go right back down to these inflection points where they bounced off of. This is not the really greatest thing in the world when it comes to technical action off of support areas. I don't have to tell you guys that. So you guys who were, and we'd actually spoken in a very hoping manner type situation up to 2025. If we could get up to that area, it might be time to lay the wood to the short side again. Never got there. I actually just kind of got trailing stopped out of this trade on the long side, playing around with that bounce there. And you've got to be willing to say uncle at some point if this thing reverses away from, the MO of what your original trade was. 1994 again. This is a daily breakdown finally on the S&Ps, and we haven't got a close here yet below this inflection point on our daily, but what we're looking at here on the breadth situation is we actually crossed a couple of days ago, so that's why we were looking at, let me just blow this up here. We were looking at on the second, when we started crossing from the second to the third to the fourth in that general area on Monday morning, not the second. What is that? I'm sorry, I got my days mixed up here. We got to correct that actually. So over the weekend and into the fourth, we got, the daily crossover as of Monday morning is Wednesday. And that's why we were looking at, I'm kind of really paying attention to our long-term crossovers. We had our balanced areas start to really evaporate here. And that's why I was looking at trying to hang on to a selling situation around that 2025 area. And why is that? Because, with our breadth kind of looking a little different here, and we've got a relatively wide profile. That POC is the top of the hill on our daily, and that's what I was looking for, to really try to, hope we can get back up there and then take the longs off and sell resistance. That didn't exactly happen that way. So again, I'm not in this short right now, which is awful. So what do you do now? Now, there is not a lot of reasons you can step in and get long with this. We don't know what's going to happen with our breadth and on our underlying instruments here on our short term yet, or the other time frames, because a lot of these instruments haven't opened yet. So when they start opening, we'll start getting some more realistic numbers before the open here, and then we'll be able to kind of see where the exhaustion measures are. And again, we were looking at some hints of profiles of, appearing on the 240 like we talked about yesterday. That's the reason that, we were looking at this like, let's just try to trade this bounce on this inflection point in the S&Ps. We had those 240s. I think we were looking at yesterday morning, 109 stocks in the S&P were showing new profiles attempting to appear. And that was the reason that it wasn't really the right time, more than likely, to sell that yesterday morning. It was the time to more than likely try to trade against that on the long side. So we've talked enough about the S&Ps. I want to show you guys what we've been promising here, and I think you're going to like this. So as you go into these chart sections, I'm going to pull up the S&Ps. It defaults to our daily. And this is what we're looking at here. So in my opinion, this is super cool. You got a very good visual now with our boxes inside the scanner. Yeah, I don't know if you guys are seeing this in the den. Let's see here. All right. So I'm going to be using this on the show. I'm going to try to get away from e-signal charts. Again, we've been testing this. Just want to make sure that, and here's the NASDAQ, and here's natural gas. So I think these are cool visuals that we've gotten here now, and everybody's going to hopefully benefit from that. So if we go back to our dashboard, I want to go back to our ETFs for a second. And XLY, I want to kind of pull up some stocks in the XLY. Look at my weekly here. So on a relative strength scale, you've got some things pointing in your favor that were in your favor on the short side. We want to kind of see how those had panned out. And I want to take a look at Amazon really quick here before we go into that XLY. Again, first hints of a breakdown here. Kind of came off those weekly unfair highs and finally closed below. Almost got back to that maximum selling point around 653. And Amazon's looking a little heavy here now. So pre-market, we're looking at 619. And let's see where that is on the broad scale. So the biggest support point on Amazon, which is what I think your targets should be, are 605. So if this market comes apart at the seams a little bit more, 605 is going to be where you could pick a battle alongside on Amazon. Remember, it's trading relatively well still, even in the face of what this market's doing. We've had our first hints of a breakdown on our daily. And taking a look at the XLY on a chart, you still got that 72 sitting down here. It's down there, and I think we're pre-market. We're trading 76, so still got resistance at 77.67 on the XLY. Let's take a look at the let's see, FSLR. We're going to take a look at FSLR, Paul. I finally got a clock. David White is great. He created a clock for the people who can't seem to tie their own shoes correctly, like me. So we're going to be on time with the breaks here now. FSLR. So let me see. First Solar. I don't know if this is in the scanner. Let's see. So Paul, what are your concerns, as they say on Pawn Stars? I like when they come in and there's this thing. What are your concerns? Or what are you asking me? Should we be buying this? We're going to talk about this a little bit more. If you could type in maybe a little bit more of your concerns in the den. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, was just looking at the notes there. Taking a look at FSLR. It's, the question I guess is it time to short this thing? The rest of the sector looks weak. If the rest of the sector looks weak, I would short the weaker ones of the sector. I mean, obviously, who asked this question? Paul. Obviously, there's a lot of juice, as Tom would say. There's a lot of reward in shorting. I mean, I've got friends that make a living off of this. That they short penny stocks that go on these crazy rides up. It's all fluff. The email blast, the blah blah blah, to whatever, to get them to really go hard, get everybody excited, and then somebody pulls the rug out from the whole company because it wasn't a real company. There's a lot of money to be made in situations like that, and they all seem to come back, by the way. But when you're looking at you pointed it out, Paul, on a relative strength trading game, it looks like the sector's weak. Well, try to find the stocks in the sector. This is my opinion. Try to find the stocks in the sector that are already weak, and those are the ones that, if the sector goes north, those are the ones that are probably going to look ugly in a rally, but also going to continue to fall apart if the sector falls apart. So this will be one, again, on a high risk trading game, would give you a lot of points possibly if this thing starts coming apart at the seams. But you got to remember, a stock like this that's heading north, and even pre-market here, I'm looking at the 240s and 60s pre-market. I mean, the market's down what, 30s? What are we down? Let me see. I can find that out pretty quickly because I've got a charting package. 38 S&Ps right now, 1973. This stock is open, hanging in there. And if I'm short this thing right now, I'm in a full-blown panic. I mean, I'm not sleeping, taking aspirin and maybe a few other things, because this is terrifying. All right. So you've got better candidates in the sector, Paul, and I'm sorry to drag that out. Yeah, I mean, but it was a really good question. These are types of things that in the past, I'll be honest with you, back in 20 years ago, maybe I would have said, oh man, it's gone up too high, and let me find some reasons technically to to step into this thing on the short side. You got better candidates. I mean, I'm just kind of a big fan of trying to make it as boring as possible instead of as exciting as possible, because you'll pay for the excitement. All right, so the S&Ps. Let's go back to these things because they're kind of falling apart even more so here. The good news is right now is on the long side. If you've been trying to play around with these inflection points around 94 on the daily, you've definitely had a reason to either get short or get stopped out of long. So right now it's not a long situation. You had some reasons yesterday to buy a bounce like we talked about pre-market, but right now there's really no reasons. I mean, you on the scanner itself, you don't have any people lining up at the border here with new profiles on any of these instruments right now. And this is going to get a lot uglier, obviously, as some of these instruments open. And right now, on the long side, if you were long, you should be stopped out of at least an intermediate trading game plan. The next stop down on this, remember, is going to be this 1953. And if I go into the scanner, and I go into my futures section, and I pull up, I could go to my speed dials, whatever. Let me do that. Let me go into here and see, as we flip across here, you're going to get those inflection points. So there's that 1953 down there, and we're going to paint these on the index too. That's not on this release, but if I go into my futures section and I go into the ES Mini, I can find out where the market is right now. That's about 1973, and here's the inflection points. There's that 1953. This is real-time level of the market. And again, we're releasing these charts out to you. But if I go into my daily or my weekly here, there's that 1953. It's plainly stated over there. There's my daily. There's that 1994 rounded off. Okay. All righty. Yeah, I did say border. There's, the troops are on troops are on the border. Did I say that? Custer's last stance, troops on the border, Maginot Line. Why do I relate everything to war? Anyway, let's take a look at the dollar. This is one we've been pounding the desk on the long side about, especially from any pullbacks to 98 and then eclipse to 98.30. This has been a real cool situation. And the daily, remember, we don't have any new hints of new profiles here. So long-term guys, this is still a decent trade on the long side. But here's our 240 regulation of this dollar trade. This is real-time futures I'm showing you right now. You've hit a little bit of a peak. We talked yesterday about this area right here being able to take some weight off of 99 on this big wide profile POC, 99.37, taking some of the trade off, and now you've got a top of a profile in the 240. So you may get a retracement back. We've already had a retracement back once into this 99.29, but you're in the middle of a profile and the regulation up. I don't see any real reasons to still get out of this trade yet. And a lot of, like Tucker has said, it's always getting out of good trades early. You can't go wrong taking profits. I know that's something else someone said at one point in the history of trading. But the 240s are a good regulator of the trade up, and you should have been out of half of this position already. But it's interesting because of that POC on the weekly. But it's interesting now how this unfair low on our 240s matches the unfair high, which also matches that POC on the weekly. So this is a massive support area for this particular instrument, and if it's broken, then we may have a little bit of a whoosh sound on the dollar. But right now, I'm not that concerned about the dollar being the place of safety right now. A hydrogen bomb, they were saying, is what, 1,000 times more powerful than a regular nuclear weapon, and they're smaller, and you can put them on the head of a ballistic missile, which start thinking about that. I got an itch. I laughed so hard yesterday, talking about North Korea and the hydrogen bomb. That's what I'm referring to. But I was in an argument with the guy on the phone, and my mother had come over to visit. She's 90 years old, and after I got finished arguing with him and yelling and screaming, and then laughing and yelling and screaming again, she was listening to the conversation. She said, "Who was that?" I said, "It's just a Korean friend of mine." And she went, "Was he North Korean?" I went, "Yeah, I'm doing business with the North Koreans right now. Just don't tell anybody." All righty. We're going to take a look at gold. And we're going to hit this pretty hard when we come back from this break, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Albert, if in the den, thanks for coming back, guys. Albert in the den, if you're referring to my math ratio of a hydrogen bomb relative to an atomic bomb, that's what I read it as, but maybe I'm wrong. I didn't do the exact discovery exploration on that, but maybe you can enlighten us. I know I know a hydrogen bomb is a little bit more impacting than a regular atomic bomb, but maybe my ratio is off. I said 1,000 times bigger explosion. All righty, let's take a look at gold. All right, so we did get a little bit of a bounce off this 1060. I hadn't been a huge fan of this with the global unrest, the fear of North Korean hydrogen bomb possibility. I still think gold should be bouncing a little bit better than this. I'm not buying this. And we talked about the ultimate selling point for it's going to be that 1089, 1090. All right, and why is that? Because the POC, the top of the hill, the peak of the mountain on this profile, as you can see, is around 1090. And I'm going to go back to my scanner here, and I'm going to go back to my futures section. And I'm going to show you, here's gold, and obviously the green shoots are there. But we're going to go into this. There's our daily chart on it. Let's just go into our multi-level situation here. We came up to a high already. Let me just go back to gold. Let me hit our daily. What do we hit a high of? Let's see here. Let me just go back to these charts for a second. We've reached a high of 1089. All right, so we're back down to 1083. So I'm looking at this, and this is why we're looking at it this way. Here's our weekly. Here's that POC, which lines up with that former 1090, 1089. You got a former daily unfair low around 1090 also, 1091. So that's going to be a heavy lid on this product. And we talked about waiting patiently until we got back up into that 1090 general neighborhood to start trying to look at this from the short side. And I think we've accomplished that. I mean, this thing can go higher. Make sure your stops are in, but I just don't see it happening for gold right now. And I'm happy it rallied up actually to try to whack this thing again. Let's see here. Yeah, let's see. Yeah, definitely, Albert. Thanks for doing the research there. It requires a nuclear reaction to get going on the H-bomb, to get it started, to get it jump started. And that's kind of what had to happen with the to get these notes a little bit higher. I'm actually looking at this now. This is our daily on the 10-year. We've met our targets initially, 126.23, 23.5. Notes and bonds, again, sympathetically, empathetically going up here based on the market pullback. So again, can the market head lower, the broad market head lower? Yes. I think these notes and bonds should be rallying a little bit more here. But again, you've reached a resistance for today. You've got to pay attention to it. And I don't think you should be buying notes and bonds right now here. You should should be happy with targets, and you should wait for a daily close now above 126.23, 24. If that doesn't happen, no big deal. Okay. That's the deal on notes. Silver, we've talked about this kind of being the redheaded stepchild of the metals world, and it's proven itself out now. So not getting any love, so to speak, from silver relative to what's going on with gold or any type of a fear trade or anything else. I mean, you talk about something showing its hand. This thing is showing its hand right now. All right. This thing should be bouncing a little bit better right now, and it's just not. It's hanging below these unfair lows, consolidating down here. For you guys who are thinking about trying to catch a bid on silver, you could look at it as a basing action in general. But right now, it's you got better trades out there to go long than this one. Here's the 240s on it, by the way. Just catching the den here. Let's see. That's a good one, Terry. Maybe he did sleep at a Holiday Inn last night. Here we go. Let's take a look at crude oil. Now, this is something we've been talking about, and again, beating the desk pretty hard about do not get long this thing. and look for areas to sell crude oil over and over again. And if you've never had a clear-cut sign on something right now, this is it. We talked about selling breakdowns again below 36.82, waiting for rallies into resistance points, which was 37.62 up here, and turning the wrench the same way. This is there's, I mean, I hate to say there's no end in sight on this particular product. You've got the Chinese news coming out, and you've also got some, reasons from the past that should have kind of bounced this thing defaultly, but it's just not happening now. And any reason whatsoever this thing to go down and break down is happening, and you've got to pay attention to that. It's almost like scary news that goes sideways at best, bad news for crude oil, it just goes south. I mean, this, again, we could go sub 30. Don't think it can't. I wouldn't be doubling down on this thing right now. We're going to hit some currencies. And the cool thing is I can go into my scanner, which you guys are going to get, and actually look at these currencies. Here's our euro. We had a significant breakdown in this thing that we were looking for. I'm going to start my currency server. Man, these cloud servers are just freaking awesome. I'm going to start the page on it. See how actively these things trade? This is a difficult one for guys who are playing around with this data and have ticker plants on charting packages. This is the one that just drives you nuts. So it's going to take a little while to load this because these currencies are super active right now. Let's see. All right, we're going to come back to that and let that load. Okay, we took a look at crude oil. We're gonna head back into the dollar really quick. We talked about this earlier. Not a lot of reasons to take off the long-term trade. You've got support on the dollar, huge support around 99.30, that general neighborhood, okay? And you got to think about stops relative to that neighborhood on the dollar. Let's take a look at Apple. Got about 10 seconds before the next break. And we talked about staying away from this and selling that DMZ up top as we rally back up into it. So we got into that 104.5, 106.5. We're able to get short more up there, and now we've fallen apart. And we are trading 100 right now. So that's about a $5 trade on Apple in a day. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, thanks for coming back. I guess the question this morning is, do you buy these S&Ps on a gap down of 36 S&Ps? And I'll tell you why you don't. There's nothing to hang on to down here. This is our daily. This is our 240. There's no inflection points. There's no profiles. Here's our 60-minute. You don't even, on a very short term, you don't even have any hints of new profiles attempting to appear. So you've got nothing to lean against as far as the fence goes. And to be honest with you, this could happen today, but I don't know if the odds are in favor for it to happen today. You've got a bigger thing to wait for down here on the weekly, 1953. So between 1953 and 1987, 1994, you're kind of in the land of anything goes. And until we get some new information, and you'll get this new information if I go into my futures section and I go into the S&P minis, you'll get this information right here. You'll be able to look at these cells and they will change tone. You'll start seeing some orange peel back concepts right here, as you see on this. Just for example, that yellow right there, orange yellow. Some people's screens, I think it's orange, but you'll start seeing some different inflection points appear, and you'll be able to use that information. Here's the daily. This is our chart that we put in here. Here's the 1 hour. It's just nothing down there. Okay, so might be time to just sit patiently and wait. That's a hard thing to do sometimes, sitting in front of this computer. I'm aware of that more than anybody else. All right, let me log into server 3. This is where our currencies I can get to. Let's see here. All right, let me try this server. All right, yep, here we go. Okay, so looking at the euro, we talked pretty religiously about this 109 area, getting that close below, going back and retesting and trying this short again. Now it's unfolding nicely. And here's our daily chart on the euro. So what do you do with this now? Again, I'm not a big fan of the dollar really turning around, therefore the euro in an inverse relationship. This is what you're looking at. You got a new 240 profile that appeared above price action here. This always has bearish connotations. So again, you're going to have some volatility with these currencies right now, but I think you've got to hang in here on this short trade a little bit lighter. The scanner will let you know when you'll have some targets being reached on this. So I'm going to go to my Forex section. I'm going to go to EUR USD here. And as you can see, red across the board, and 49 arrow down means we've had 49 consecutive, by definition, breaking initially below a profile and never really, and even though we've got a gray cell there, that means we're within the balance area on that 60-minute, but we've had 49 straight 60-minute sessions in a defined downtrend, and you can literally, use that feature alone to do quite well with the scanner. But right now, you don't have anything going on here. No yellow peelbacks, no profiles attempting to appear. Just sheer death, in my opinion. We got to take a look at the Aussie dollar. All right, so this one kind of broke my heart. And we finally caved in below the uncle point for me, which was around that week. This is our daily. This is the weekly unfair low. So, again, this trade's off right now. We were able to take off some weight up there. I hung on to some of it for a long-term trade, and right now it's uncle time. So stops have been hit on this one, guys. And it's just a wait and see now. And you really don't, you don't have any indications to even retrace back up to that area right now. Let's see here. All righty. So we talked about the ruble trade too and the Canadian dollar. I'm just going to give some updates on this. This is the ruble trade. I mean, it's incredible, actually. This is the daily. The weekly, you know what the story is there. Just using the 240s to kind of regulate this trade up still. So let's take a look at the Canadian dollar. This has been one we've been pounding the desk, that it's been showing itself constantly to continue to get devalued. And now you've got a profile this week well below, which is bullish on the chart. And that is a indication that the Canadian dollar is becoming devalued again. And again, Larry pointed out, the hardcore relationship of this currency to crude oil is indisputable, and that's true. So as we look at this, it's been showing itself relative to the dollar lately, showing the relative strength of the chart relative to the dollar action, and also that crude oil trade is just giving this thing extra gas to go north. Okay, here's the 240s on this particular trade. We've talked about there was like zero reasons to go short this product and a lot of reasons to go long, and that's kind of the cool setups when instruments show themselves like this. Okay, so we go back to another server. Not that one. We're going to go here. That's not the one either. This one. Okay. All right, we took a look at Netflix the other day. I don't know if anybody's playing around with this. Trading 105. So let's see here. Here we go. So we're trading about 105 now. So again, we talked about if you were going to mess around with Netflix, you had a 109 area that could be looked at as support, and all-time. Let me see here. I'm sorry. All-time long-term support is going to be around 92.27. So right now, if that was and Netflix looked relatively well in the face of all this, and we talked about yesterday, the action on the previous day was kind of almost island reversal looking possible setup almost to me, but we're hanging around down there, and the market's kind of dragging everything down. So again, waiting until we get back above that 109.19 might be a good idea now. It's still acting relatively well in the grand scheme of things. All right, we're going to take a look at ExxonMobil here right now. XOM. It's almost 2% of the S&P 500. So let's see how this thing is acting in the face of all this. So this morning trading 76.65 on a 30 S&P gap down, 76.75. So 76.65. So here's the long term on ExxonMobil. As you can see, has made some higher lows lately, and the balanced area is kind of like changed for the most part on this particular stock. What do you do with it now? I like the way it's acting, actually, especially relative to crude oil. And you've got some support if crude oil drags this thing farther down, you got some support around 73.5 to 74.5 on this stock. I'm not opposed to buying it at that level. For right now, it's kind of a wait and see. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I was looking at stocks that were showing strong uptrend. I went over here and looked at uptrend support. Stocks that were pulling back to support areas that have been in an uptrend. And also, I just looked at strong uptrend. And you know, what immediately just popped up on the top of the list, sorted in alphabetical order, are AMAT, AIV, Apartment Investment Management, Coach. I think we looked at that the other day. In fact, let me look at Coach really quick. I've got AMAT up right now. So AMAT is, interestingly enough, we're trading 1840 this morning. So we're back at the top of our profile here. This is a stock that's acting relatively well, guys. Technology sector, obviously, you know, not really breaking down relative to profiles. We've just kind of come back like a magnet into those unfair highs. And I like this again, too, because, you know, we've got a profile that attempted that appear below price action here, which is bullish. Well, let's take a look at COH. I think somebody had asked for this. Hold Was it yesterday? I can't remember actually. But it's on the list. It's asking. We talked about a little bit of a breakout there and a buy support at 32.77. Terry, yes, I forgot. As I forget a lot of things quite often. But yeah, so again, that was the kind of the stop-oriented situation on Coach, but it's interesting how that, and it's trading up this morning actually. But that was interesting how that popped up on the list here. So again, if you keep these up, you can put some cool little custom sorts in here too of your own. What I want to do is show you this. I'm going to go back to my dashboard. So let's just say I want to show stocks that are trading above profiles on the weekly, above profiles on the daily, but just started to kind of reverse on the 240. So these are ones that are sitting kind of in reverse mode of what they were in on the first hints on a lower time frame of just showing some weakness. I really think that you probably want to do this sort, though, if you're going to do manual sorts here today. Is just let's just below, above. These are ones that are kind of showing some strength relative to what the recent trend has been down, and that's going to be a smaller group, obviously. Let's look at UPS, actually. All right. So, and actually pre-market, is it down? Pre-market, yeah, pre-market is, I don't know exactly where we're at pre-market on this stock right now, but obviously this stock's been just not doing well. But here's the daily. Again, no real reasons to buy this on a long-term stance. Here's the 240. That's why I was just showing, okay, yesterday looked like it started showing some bucking the trend situations. Might have a little bit of a contra trade there, but you'd really want to see, and I can do this sort also. You'd really want to see, and let's just do this really quick. Let's reset this. And let's say, let's showing new boxes attempting to appear on the downside on the long term. So we've got Gap, Macy's, Newfield Exploration Company. I'm showing the stocks on the downside that are showing that new demand area wanting to be placed, PVH and TWX. So we've got Time Warner sitting here. Might be a thing to look at, but we'd want to see that in coinciding with our 240 kind of breaking above also. So, Gap, GPS, let's take a look at that one. GPS. There's Gap, really big week for Gap, and there's that breakout yesterday above 25.63. We've already used this support one time. So there's Gap on the daily. So you'd really want to see this thing break 26.77 to really just get excited about it. Guys, stay tuned for Larry. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.